Hey guys, welcome back to Smart Military Financing. So far, I've talked about short-term buckets, i.e., savings account, money markets. I've also talked about TSP, which is your long-term bucket, your retirement bucket, and I've briefly talked about your midterm bucket. Now, your term bucket is the difficult one, in my opinion, because that's the one that you use for things like things that you want to do, vacations, vehicles, honeymoons, etc. You name it. But how do you grow a midterm bucket? Well, what I do, or what I like to do, is I invest in the market. Okay, so uh, I've made only one so far. Talked about Meta and where they were and the quarterlies coming out, and it went up $50 per share, so that was a pretty good win. So now we're gonna talk about Google. Google has the quarterlies coming out today after the market, and kind of the same thing happened, right? So the day before they come out with the quarterlies, there's a sell off because people are uncertain about what's going to happen with that share or that stock. And so Google has, once again, right before the quarterlies come out, it dipped. So if you wanted to buy right now, it's a good time to buy. And Google historically does a 5 to 10% increase on their price once the quarterlies come out. So for midterm bucket, what I highly recommend is that you do index funds. Index funds are relatively safe and they are pretty good. I have a two that I use in particular, and they run around 23 to 25% per year. That's again for every $1,000 you have. At the end of the year, you're gonna have an extra $250 on top of that. So it's not a bad gig, and that's what you kind of put your money in and leave it. Okay. What I like to do, I like to do index funds, but I also like to swing trade. Swing trade is not the same thing as day trading. I'll talk about day trading later on, or at least how I do it. There's many ways to skin the cat. But what I like to do is swing trade, which basically means I find a stock that I like, I set a price, I buy it when I think it's a good price, and sell it when I think it's a good price. Not necessarily looking for long-term hold, not necessarily looking for a percentage, but a specific amount of dollar that I like. Again, so right now we are looking at Google. Google right now is about 330, give or take. And what I'm looking to do is I want to gain $30 per share. So I will be purchasing Google today when it's the lowest so far. And I'm going to look at the aftermarket, which is 1600 Eastern Standard Time. Now, aftermarket, if you look, just go on your iPhone and look at your stocks and look at Google, GOOG, and you're gonna see it. It's either gonna go trend up or it's gonna trend down. If it trends up, it's a good sign. If it trends down, just go ahead and sell it, cut your losses. You're better off losing $1 or 2 per share than $30 per share. And so that's what I'll be doing today. I'll be watching Google very closely, and I'm gonna purchase it at its low, and then I'm gonna watch it after the market and see if it trends up. If it trends up, I'm gonna follow it, and then if it hits the target price that I want to do, which is $30 per share, then I'll be a happy camper. Again, if you have questions, please ask me, like the videos, follow me on YouTube for extra advice.